It is time to have our early morning business chat. And today I want to ask you, do you know how to invest in the stock market? Are you playing any part in investing in the stock market? And in studio, I'm joined by the very intelligent Ken Monyoncho, who's written not just one, but 2 books on this subject of investing in the stock market. Welcome to the show.
Thank you, buddy.
And Ken, what inspired you to write a book on such a topic?
Bonnie, in 2002, when I was working with the Nairobi Securities Exchange, I was so surprised that there were people who were making so much money.
Yes.
And yet, I never got to know. Well, not that I was special, but I was wondering, how can I be in an economy where people are making money?
Correct.
And there's no information? And therefore, for the 2 years I worked there, I made it my goal to really understand how the Securities Exchange works. And I began to talk to my relatives. I told them, you know what? There's an opportunity here where you can make money. So I began having evening meetings, calling my friends, telling them, come, and let me tell you how you can make money from the Nairobi Securities Exchange.
Correct.
But after a while, I realized, how many Kenyans can I speak to by calling them for seminars and meetings? I realized it's impossible. So it is in one seminar that I attended, one of my mentors asked us how many of us who believe are professional speakers have ever written a book. I never thought it was really anything to think about, especially in terms of writing a book. That was a very difficult thing to do. But he said, you know, writing a book may not make you rich, but when you write a book, you are able to reach very many people. And if you're lucky, the book can also sell you. So you can either sell the book or the book can also sell you. And that's why I wrote the book. I thought it's important for me to share this information with as many Kenyans as possible. Yes.
All right. So, and I'm saying you've done 2 books. The first one is how to save money for investment.
Yeah, how to save money for investments.
Savings has been a topic, you know, with Kenyans for a long time, coming from chamas to banking at home and to formal banking and different investment methods and methods Kenyans use to save.
Yes.
What are these methods that you're addressing in your book?
I've addressed about 5 or so methods in this book, and basically is on a personal basis.
Correct.
The reason people want to move to chamas or they go to either merry-go-rounds or getting an insurance product, it's because they are unable to do a personal assignment on themselves. They cannot save from a personal perspective, and therefore it's better if their money is with somebody else, who they know for sure it's safer, and they cannot get it. So it's better if I give it to somebody else to handle it for me. Now, the book I have written here, a number of the methods I've talked about is, one is to recognize that without you as an individual, it's very difficult to be able to start saving. Why? Most people are working very hard every day. But if you ask them for who they are working for, many of those will tell you they are working to pay other people. For example, at the end of the month, once you get your paycheck, who do you pay first?
Your landlord.
Of course, your landlord. Then you pay
your mechanic,
either your mechanic or you pay your whatever, all the debts that are pending. But you never remember that you are that person who made that money and who are making everybody else rich except yourself. So the first thing to recognize is that you are a very important part of the whole process of saving. And therefore, you need to recognize that even after giving your employer 8 hours or 10 hours, make sure that 2 or 3 of those hours are for yourself. Just to appreciate the fact that because you are there, other people are able to benefit from what you earn on a daily basis.
So you're talking about paying yourself.
Start to pay yourself first. Immediately you get your paycheck. I know the taxman has taken his cut, so there is really no discussion there. But then you look at your gross pay and say, I need to start paying myself at least, on a minimum basis, 10%. That money can be set aside for investment. Because, Bonnie, you will appreciate that money is never enough. And even if you work for the rest of your life, you will still never make enough money. There are people who are earning so much money, but still, to them, it's not enough. But it's important to think about retirement. It's important to think a time when you are not able to work as hard. So if you can work hard in life, work very hard early in life, make that money, and make that money work for you later in life, then that really makes a lot of sense than you eating all the money now and hoping something else is going to happen in the future. Now, one of the key areas where you can mobilize those funds is remembering that you can actually pay yourself first. The money you save at the end of the month, that is the money that you want to start investing early in life. So that's one way of doing it. Second way, of course, many of us are in debt. Getting out of debt is really a big contributor towards paying yourself. Why? Because when you are in debt, you're always paying interest. And when you pay interest, it means you're paying somebody else. So the earlier I get out of debt, the less money I pay out of my pocket, and the more I'm able to save for my future. So if people are in debt, of course, there are ways we can be able to help people get out of debt, but they need to first of all think about, how do I get out of this debt so that the money, instead of paying interest over and above what I'm paying, is actually goes to my investment. So that's a second way. The third way they can think about is, it's important to have a budget. Most people have budgets in their minds. These are simple things, Bonnie, but because they're so simple, sometimes you think you know them, but practicing is another thing.
Yes.
But having a budget helps you to know where your money is going.
Yes.
You will be surprised that most people do not know where their money goes. If you ask them that this morning or yesterday you left your house with some 200-300 bob or 500 shillings,
They don't know where it went.
if I ask you in the evening, where did your money go? Most probably they will explain maybe 50% of the amount. But the other 50 they can't explain, simply meaning the money is lost. Because if you don't remember where your money went, it means you've lost it. But if you had a budget, you know that if I leave my house with 500 shillings today, I know where it's going. I know I'll spend it for lunch, or I know it's for transport, I know it's for A, B, C, D, and by the time I go home, I'm happy because it has done what I wanted it to do.
Yes.
What most people do is that they just spend. When it's over, either they borrow, or they say, or if they're lucky, the month is over, they get some more money, and then they continue spending. So having a budget is such a key thing for anyone who would like to really mobilize these funds for investment.
So, first thing, pay yourself.
Yes, pay yourself
Have
first.
a budget.
Not pay yourself. Pay yourself first.
Pay yourself first.
Yes,
Okay.
yes.
Have a budget and reduce your debts.
Get out of debt.
But just let's bring back to reality, Ken.
Yes.
We're living at a time where you can barely meet your needs from your earnings.
That's right.
That's where the debts come in, the loans. And before we even get to the loans, the Chama debts and the 3,000 and 5,000 from your friends, how then do we operate in that environment? I mean, we can barely meet our needs with what we're supposed to. That is the earning. So how fast do we ensure that we operate in an environment that will allow us to actually pay ourselves?
You take me back to a principle in finance that says this, that you need to learn to live on less than you earn. Now, I think your question comes around there.
Yes.
How can I live on less than I earn when what I'm earning is not enough? Well, the next principle is, if it's not enough, then make more so that you're able to live within your means.
Yes.
You see? What happens is needs always grow to meet your income. That's a law. It's called Parkinson's law. That every time your income increases, your needs also increase to meet that need. And therefore, the reason why people seem to have more needs than income is because, one, there's lack of discipline, in the sense that whenever I get a slight increase, I want to change my lifestyle. I want to live a slightly different life. But I forget that where I am, I'm okay. I'm fine. But because of the pressures of either my peer pressure or my colleagues, the kind of life they're living, maybe the kind of vehicle they're driving, or the kind of residential area they're staying in, you feel pressured to also move in that direction.
But isn't that what drives life? Just the pressure to be better?
Well, but you see, it's bringing problems. It's bringing this problem of saying my income is not sufficient. You see, it is different to grow slowly into an area where you want to be. For example, Bonnie, I have discovered that for you to enjoy life, it's important to set goals. If you're able to set goals of what you want to do in life, I want to believe that there'll be no peer pressure from your colleagues.
Yes.
For example, if you have decided that I want to live at a certain part of the city in the next 5 to 10 years, you know what's going to happen is that you're going to stay focused. Any bonus you get, you're going to set it aside for that goal. Any additional funds you get, you're going to set it for that goal. It will not be because it's pressure.
Yes.
It will be because I have set certain goals for myself. So in the next 5 to 10 years, I'll find myself where I had seen myself 5 to 10 years ago. So it becomes easier for me to manage my lifestyle because I've set goals. Now, when you have no goals, it means whatever you see which is good, you want to go with it. But the question is, do you want to go with whatever is good? Because your colleagues will be going with whatever is good, and you think this is what's good for me, or that is what is good for me. But at the end of the day, you realize that it actually squeezes what you have to be able to meet the needs that you would like to meet. And therefore, you find that your needs always exceed what you make. It is possible to discipline yourself to live on less than you earn. If you want to earn more, we say that you need to learn more to earn more, learn more, so that you can be able to live within the means that you want to be in. So you do not have to be in that cocoon to say, you know what, I can't earn enough. Because it will never be enough, Bonnie. Money will never be enough.
All right, interesting. So granted that we've decided, I've set very clear goals.
Yes.
I want to achieve them.
Yes.
And I want to save this money. What are these avenues that you can use to save?
Now, there are two ways you can use that money that you. So I want to pick it from a point of view that you've set aside some funds. For example, you've paid yourself, assuming you're earning either whatever money you're earning, take your 10% and you've set it aside, and you'd like to invest that money because the intention is really to ensure that money makes money for you.
Yes.
What you do is that since most people are employed, it's very difficult to do business on the side with the money.
There's no time.
There's no time, and you see you're at work by 8 and you're leaving at 5. Doing business, it can be quite challenging. So for people who are employed, one avenue you have is really into the financial markets. And that's why I wrote my second book, which ideally should have been my first book. But the reason was people are telling me, Monyoncho, where is the money? So I had to show them where the money is.
You're telling them to invest in the NSE and they're telling you,
They
you
asked
don't have
me,
the money.
where is the money?
Yes.
Monyoncho, show us the money. So I showed them the money.
Yes.
After showing them the money, I told them, okay, now this is where you can actually put in your money, especially if you're employed. You see, if you're working and you know you don't have that time, the best place you can put your money is in the financial market. Now, financial market has got very many products. Of course, there are stocks and bonds. You've got treasury bills.
Yes.
You can use what you call collective investment schemes, such as mutual funds or unit trust, where you can put in your money. If you're more daring, you can think of going offshore, where you can invest your money, where you don't see it, but you believe that it is there. But most Kenyans want to see their money.
Yes.
So going offshore can be a bit challenging. Or you can say that I would like to keep my money in the bank. If you don't want to risk anything, just keep your money in the bank, although it's expensive. It's more expensive just keeping it there than doing something else.
Yeah.
So those are the 4 main channels where you can actually invest your money in if you're employed.
Well, when you
no
talk
time.
about investing in the NSE, people have this idea, a mystical idea of the NSE.
Yes.
And the only time they interact with it is either on the newspaper page
Yes.
or in a news bulletin. And half the people may not understand that. When you talk about the stocks
Yes.
and counters and stocks rising and falling and IPOs, let's just go step by step
Yes.
to the layperson watching right now. How do you start and what exactly does investing in the NSE entail?
Before you start investing, Bonnie, it's always very important to know why do you want to invest. That is top notch. Again, back to goal setting.
Yes.
Because even in finances, we talk about setting financial goals that are smart, just like any other goal.
Yes.
Why am I investing? Am I investing so that do I want to be a day trader, buying and selling on a daily basis or a regular basis? Do I want to be a long-term investor? If I'm a long-term investor, why? Is it because I want to ensure that either the value that my share is making can be transferred to my children, because you can transfer your shares to your children?
Yes.
Or are you thinking about school fees in the next 10 years or in the next 15 years? Because once you're clear in your mind why you're investing, it's very easy for you then to take the steps and do that. The reason is, there are people who invest and they say, I want to make as much money as possible. Now, you can make 100,000, that's much money. You can make 200,000, that's also much money. But it's important to say, I would like to make either 10% return, or 20% return, or 40% return, or 100% return. All those are goals. Once you're very clear in your mind, then you don't get disturbed in terms of how the stock market moves. Because some of the challenges that people have is, when the stock market loses, they get very worried. They said, now, what happened to my share? Or what happened to my stock? When it gains, they're very excited. But both those people are not different until they sell the share. You see, if you have a share that's going for 5 shillings, you bought for 5 shillings, it's gone down to 3 shillings and 50 cents. It does not mean you've lost. You will only lose when you have sold the share. Or if you bought a share for 5 shillings and it went to 7, you will only make money once you sell. So really, there is no difference until you are only a paper wealthy or a paper poor until you are able to sell that share. So it's important that people, first of all, identify what is their investment objective. Once that is clear, you can say, I think, how much risk can I also take on board? Do I want to be a risky person or do I want to be a risk? I want to take very little risk. Then you can identify the product. If you want to be slightly risky, of course, shares are risky in the sense the fluctuations are much higher.
Yeah, today they're up.
Today they're up, tomorrow they're down.
Yes.
But that is the business cycle. It also follows the business cycle. If you're that type of person, you say, you know what, I don't mind. Let me go for bonds and I'll take a higher risk.
Just before we go into the intricacies of the shares and fluctuation,
yes.
we'll get to some bit of basics of exactly how we start them.
Yes.
But if you're joining us now, we are talking about how to invest at the NSE, basically your investment. And we are in studio with Ken Monyoncho, who's written 2 books that helps you to know how exactly to invest. And so you can send in your submissions through our SMS line 8040, or you can also join the conversation on Twitter on at KTN Business or at Bonitunya, and we'll be glad to sample your views and just your comments, questions as this show progresses. Being a live show, it will be coming real time, so please send in your questions and comments to our author in studio. But Ken, coming back to basics, I have my 100,000 shillings. I say I want to invest at the NSE.
Right.
How do I do? Do I get into a bus that says to NSE? What exactly happens?
Now, once we've done the basics, we know what you want to do. Then you know why you want to invest. You have your 100,000 shillings.
Yes.
The only way you can invest in the securities exchange is to have what we call a CDSC account. Okay, and a CDS account is opened if you go to any brokerage firm. And nowadays we have got banks that have got brokerage wings. They'll give you a form where you will complete. You'll of course give them your photo and give them a copy of your ID, and they will give you an account. You will deposit the money with them. With the instructions that these are the counters I would like to buy.
Yes.
Now, a counter is like a company. For example, if you're interested in buying either Total or Barclays or Stanchart or whichever, you will tell the broker that these are the shares I want. I would like you to buy me either 1,000 shares of Stanchart and 2,000 shares of Total or 3,000 shares of Sassini, whichever counter that you have knowledge of who is running that counter. For example, who are the directors?
Correct.
Because for you to invest in a share or in a company, the first thing you want to know, what's the governance structure?
How is it run?
Who is the CEO?
Yes.
Who is running it? What is the profitability in the last so many months? How has it been doing? What is the future like? For example, if you get a communication share, the question you ask yourself is, what are the chances that this company will collapse in the next 5 years? If you realize that everybody is talking, there's no way it's going to collapse. So what you do, you want to invest in that share for a long time. What is the chances that we will stop using fuel in the next 10 years? There's no chance.
None.
So I might as well put my money in either Total, Kernol, or whichever other company that is selling fuel in the market. And of course, the other thing that drives the decision is, what's the profitability like?
Correct.
All these companies are publicly listed, which means you can go to the securities exchange
and get the info.
Get the annual report, look at it, see how they've been making money.
Correct.
So these are all information that you require before you say, I want this share or I want the other share. So once you've given them the instructions, what they will do, they'll do the purchase for you. They will go to the stock exchange, although nowadays they don't physically go there. They're able to do it from their computers in the office, and they're able to match. They look for somebody who is selling those shares. And once they find somebody who is selling, they buy them from the person who is selling, and they will then deposit them in your account.
In your account.
So that at the end of the month, or as regularly as you request that broker, they're able to give you the statement.
Can you just mention about brokers?
Yes.
As an investor, do I get to choose my brokers?
Yes, you are actually free to choose your broker.
Yes.
You can go to any brokerage firm, to any individual who you believe you trust or you know their record.
Across the board, what are the rates? Because I don't want to be making my money and my broker is taking home 50%.
No, it is standard.
Yes.
The rates is standard. It's negotiable between 1.5% to 2.1% for every trade that is done.
Yes.
So buying and selling. Of course, some brokers can be a bit scrupulous and decide they just want to be selling and buying your shares because they want the 2.1%
Yes.
Commission fee. But it's the standard across the board. Really, what differentiates one broker from another is the customer service, probably the information they give you, how they treat you, and maybe just the ambience. As you go to the office, you say, well, I seem to like this place. I want to change my broker. And you can change without any problem.
Let's talk a bit about a relationship between an investor and a broker.
Yes.
So I've invested in, say, Total or whatever counter.
Yes.
And it is growing or it's not doing so well and I want to offload, I want to sell off my shares.
Yes.
How is the process of communicating to your broker and how timely is it? For example, if I say I have an emergency and say I need this money really urgently, how fast can that information move from the investor to the broker? To the end that at the end of the day, I get the money.
Nowadays, it's really real time. Within a day or so, you can get your money back, because the stock market, it's very liquid. One of the benefits of investing in the stock market is that you can get your money within 24, latest within 48 hours. You can get your money. Because all they have to do is just give instructions in the stock market. So long as there is demand for the share, it will be sold. And that money will come to your account. Now, you can either call them. Ideally, it's better you send a written statement, maybe an email, tell them kindly sell my shares and debit my account so much, credit to my account, the money that we've made from the sales of the share. So that is quite straightforward. Of course, we've come from a time when it used to take 5 days, 7 days, but now it's instant. Because of the CDS account and the transactions, you're able to get your money instantly into your account. Yes.
Well, Ken, there are very many questions already coming in through, and just before we take a break, we will be talking also some bit about what are the other different areas in the NSE. We've heard of IPOs, we've heard of rights issues, and how investors can take part in this. This and much more will be coming up. But then also just the questions that have already come in. And if you're joining us, this is your early morning business chat on KTN Sunrise Business, where we talk all matters business. And today we're talking about how you can invest at the Nairobi Securities Exchange or at the NSE. And in studio, I'm joined by Ken Monyoncho, who's an author of 2 books, not just 1 but 2. And he's just trying to tell you how you can put your money into this vehicle and it will give you return. This and much more coming up on the other side of the break. Welcome back. If you're joining us now, this is KTN Sunrise Business, and we're talking about how to invest at the Nairobi Securities Exchange. My name is Monyoncho, and I'm joined in studio by Ken Monyoncho, who's the author of 2 books, How to Save for Investments and How to Invest in the Financial Markets. And you can join in the conversation right now through our SMS line 8040, or you can join through our Twitter handle at KTN Business, at KTN Kenya, or at Bonitunya. Feel free to send in your views, questions, and comments, and we will engage you as this show progresses. And already many thanks for those of you who have already sent SMSs. We'll be coming to them in a bit. But first of all, Ken, okay, so we've learned how to save money.
Yes.
We've decided to save it at the NSE.
To invest
We've learned how to put to do our investments. We have a CDSE account and all that. There are different tools that or ventures at the NSE, and one of the most popular is the IPO.
Yes.
That we first started hearing about here in Kenya around 10 years ago.
That's
with
right.
the Kenyans and Safaricom's coming on board. What exactly is an IPO and how does it work?
Now, an IPO stands for Initial Public Offer. This means that a company that would like to offload some of its shares to the public has an opportunity to do so.
Yes.
It's initial because it's the first time. So a company may decide to, for example, it wants to raise money to recapitalize. Maybe they want to expand business. They want to, maybe some of the directors just don't want to continue ownership in the bank. I mean, in the business. So what
you can just say bank. Banks have been listing of late.
Yeah. So what they would like to do is to bring in more ownership, and they can do it either as an initial public offer, the first time they go to the market.
Correct.
Or they can offer what you call later on as a rights issue. What they say is that if you already own some of the shares, we are giving you an opportunity to buy more of those shares, which is basically a rights issue. Now, I think most Kenyans are familiar with IPOs. When they hear IPO, when they started coming in 10 years ago, you know, the form of the Kenyans and the rest, when they came in, everybody was just buying. There was a craze of buying. And I think last time we shared with you is that most Kenyans who are investors, according to our records in the CDSE account, they are just people who wait to buy once and hope that the share will do very well whenever that will be.
It's a one-off.
It's a one-off purchase. They don't care after that. They hope one day.
Is that why IPOs are very popular?
Yes.
Why, or as opposed to just probably rights issues or just getting into the market as it were? Why would it make it? What would be?
I think the essence, the feeling that IPO shares are normally cheaper. You see, the IPO, they tell you this is the market price, but you're selling it either at 2 shillings or 3 shillings lower. So everybody buys them at the IPO stage because they know after a while the price will shoot.
I think also the spark when it starts trading, probably the first month.
Exactly.
Yes.
But after that, of course, it goes back to where the purchase price. So most of those purchasers, they believe that it's cheaper at the IPO level, which may not be necessarily true, and they will sell it immediately.
And also, I think also because of the Kenyan culture, most of these people, knowing how IPOs operate, could probably borrowed. So they're saying, let me put in this money.
Yes.
Looking at what Kenyan did, or what Eveready did.
Yes.
After the spark, I'll sell off.
Pay back.
Yes. and have my money.
And bond is wrong. It's wrong to borrow money to invest, especially when you're not very sure about the return.
Correct.
You see, I can borrow money to invest in a bond that is giving me 13.5% because I know the cost of borrowing. If the cost of borrowing is cheaper than my return, I can borrow to invest.
Yes.
But if I'm borrowing to put in a stock that I'm not sure what's going to happen in the next 5 months or the next 1 year, it's not proper. It is always advisable to invest money that you have saved. You've set aside money for the last, let's say, 5 months, 6 months. That's the money you should actually invest. Yes.
Long-term versus short-term investing at the NSE, how does that work?
Now, short-term investment, you must be having very many shares and you must be very good at investing the stock in the securities exchange. I mean, if you have 1 million shares and they go up by a shilling, is that good?
That's good.
That's 1 million shillings a day or 1 million shillings a week, because fluctuations are not very huge. They are normally 1 shilling, 2 shillings, 50 cents, you know, in a day. So if you have very many shares, you can actually be trading on a daily basis and be making the cut. Now, if you don't have very many shares,
the majority of Kenyans hold
don't
1,000
do that.
shares.
1,000 shares, 2,000. One way, first of all, to increase the number of shares is to be a regular buyer of shares. That is one of the best ways of accumulating as many shares as possible. So you just buy 100 shares every month, or 200, or 1,000, depending on the price.
So I don't have to save up money and walk to my broker with 250,000.
Not really.
I can go with my 5,000 shillings.
Go with your 5,000 every month, or your 3,000 every month, 6,000, 10,000, on a monthly basis. I can assure you, in 5 years, you'll be shocked the volume of shares that you own in 5 years' time, just because you've been doing it slowly every month, and consistently as you move on. So long-term shares, for example, you could be saying, you know what, I have about 20 years to retire, or about 10 years to retire. What I want to do is, by the time I'm retiring, I would like to have 10,000 shares of, for example, Total. That's my favorite share, Total.
Have you invested there?
Oh, yes, and I fuel there, so I have to fuel where I invest. So, for example, I want to have 10,000 shares of Total in the next 10 years.
Correct.
Total pays me quite a bit of money, dividends, every year. I get at least a shilling or two per share. So if I'm estimating in 10 years' time I'll have 10,000 shares, it means every year I'll be getting an income of 40,000 shares without much ado, without much work. And that's just one share. But if I can invest in 3, 4, 5 shares, I'm guaranteed of an income when I get retired, when I retire, every year from the dividends that I get. So long term depends on why you want to do it long term. But long term is best for retirement. Long term is best if you want to hand over the shares to your children so that you invest on their behalf. Long term is good if you want to either put a down payment for a house deposit, because for sure the share today will not be the same price in 10 years' time.
Correct.
And a good example is Kenya Airways. It was 202, it was 11 shillings. It was actually, it began at 12 shillings, 11.25. Went back all the way to 5 shillings. In 202, it was around 5 shillings. But today, it's not at 5 shillings. It went all the way to 100 shillings, and then it came back again. So for sure, the share will never remain the same. So value will have increased. And the beauty of shares bond is that it actually protects your money from inflation. So if you have money, if you have your money in shares, it means as it grows, it also includes the inflation effect is intrinsic in the value of the share. Therefore, by the time you're selling your shares, it will have included that inflation aspect. Yes.
Ken, just before we get into the conversations from people sending in SMSs and viewers on Twitter, we've talked about just the kawaida buying of shares. But then when we go to the other vehicles like treasury bills and bonds, how do those work?
Treasury bills and bonds, the returns are much lower than shares, but those are guaranteed returns. And you see, the more guaranteed an asset is, the less the return. Because money is normally made when there is risk, when there is uncertainty.
Correct.
The higher the uncertainty, the higher the return. So treasury bonds and treasury bills are guaranteed, they've got guaranteed returns, and the risk is very low because this is government paper. Of course, we've got government bonds and we've got corporate bonds.
Yes.
Government bonds are 100% backed by government. Even if it means printing money, they will print to make sure they pay you the money they borrowed from you. Now, treasury bills are short term, between 91 days and 364 days.
Correct.
So government may go to the public and ask them to lend them money for between 91 days and 364 days.
Correct.
The minimum you can invest there is 100,000 shillings. But you also need to have an account, called a CDS account with the central bank, but we are able to invest your money in. Now, bonds, the minimum you can actually lend government, the minimum period you can lend government is 1 year. So the bond, the lowest period for you to lend money to government is 1 year, between 1 year and 15 years. We have bonds up to 15, I think 30 years in the market where you can go and actually invest the bonds. The procedure is very simple. Go to central bank, open a CDS account. They'll do their know your customer kind of thing, just to know who you are, what you do. And they will, once you deposit money with them and give them instructions, the next account you'll find that you've got actually your treasury bill or your treasury bond. And the guarantee is that bonds, interest is paid twice a month.
Yes.
I mean twice a year, sorry.
Twice a year, yes.
And it is spot on. Exactly 6 months after the day you invested, if you go to your bank account, you will find the interest has been deposited for the period that money has been used by the government. Yes.
Interesting. Let's open up conversation to our viewers from home. And if you're joining us, we're talking about investing at the NSE on this edition of KTN Sunrise Business. And I'm talking to Ken Monyoncho, who's written 2 books about how to save money and how to invest in the financial markets. And as I said earlier, you could send in your views, your comments, your questions to our SMS line 8040, or you can join us on Twitter via our handle at KTN Kenya, at KTN Business, or also Boni Tunya, and we'll be able to sample those. There is an SMS from, I think it's Pastor Owuya from Kakamega. He says, Ken, can you say something small about how churches and religious organizations can save to do their projects?
Wow, that's very interesting. Now, you see, if churches want to get into projects, that's basically like a business.
Yes.
Getting into a business. So what they need to do definitely is based on the accounting that they are doing with the church.
Yes.
They need to keep on thinking of what is it that we want to do to be able to help our people.
Correct.
But I think primarily what we need to figure out is that churches, ideally, business should not be their wing. They should not be getting into business. If they're able to
Of course, coming on in the back of a week that has the
it's
church
been a
has
terrible
been really
week.
battered. Yeah.
No, it's been a terrible week last week. But business should not be their key thing. Business should be, if it is to support what's going on. One, I would prefer, first of all, that the congregants themselves be able to understand that our business is not business. Our business is preaching, and therefore we should make sure that the congregants they're ministered to, which means that they should be able to raise those funds. If they want to do any projects, then they should be able to raise the funds within the church itself.
Correct.
But going outside to do other businesses, there is of course a lot of challenges that come with churches dealing with businesses.
Accountability.
Yes, you must have an independent wing dealing with business, which is accountable in terms of how they're spending money, which has got audited accounts.
But then granted they have that independent wing, it is okay for them and they can invest at the
Yes,
NSE.
if it's okay. That independent wing, not money that comes as offerings.
Yes.
No, money that is going to start as a business. So they may decide we want 5-10 people from the church who've got a business mind. Can we mobilize funds and do this thing on behalf of the church so that whatever income comes in from here can be able to support the church? That is something that I can think about.
Correct.
Yes. Yeah.
There is an SMS from Antonina in Nakuru. Very clear. He or she says, how can I get that book? Moving on, I think there's another one says, what will be an investment growth, say, of 5,000 to 20,000 in shares within a period of 5 years? This is Stanley from Kisumu.
We need to know that the return you get is always equivalent to what you invest. If you're looking at 5% or 10%, yes, that's 5% of 5,000 or 5% of 20,000. You see, it's different. And therefore, if you're looking at a growth, for me, in the next 5 to 10 years, I do see of course, a steady growth of about 25%.
Yes.
On an average, 25% for the next 5 years, 5-10 years. Yeah.
All right. Then there's another SMS that says, how do I invest offshore?
To invest offshore, of course, I want to assume that you have considered the risks. Risk offshore, it's only high because you don't know where your money is going. You just believe that it has gone to a bank somewhere in a country outside Kenya.
Yes.
And once you've taken that risk, what you need to do is, first of all, identify. We have agents in Kenya that deal with offshore investment. All you need to do is just get in touch with them. Probably we will send you my email. You can send me your information.
Yes.
And we'll just direct you to somebody who can help you to do offshore. What happens, these agents take your money and invest it or give instructions to a company in another country whose business is to look for the best shares across the world. And what they do is to invest your money in the best shares.
Yes.
The beauty of offshore is that interest rates in those countries where this money invested is very low. For example, I know places where they've invested where the interest rate is about 2.5 to 2.5 to maximum 5%. Now, if your return is 20% or 25%, you can see definitely that you're making good money compared to investing it probably locally where the inflation is close to the returns that you're making. Yes.
Let's move on, and quite a number here. Let's see. Great. There's so many people want to buy the book. I should invoice you. Someone says, I just tuned in. Where can I buy the book?
Yes.
Then there's someone says, I want to invest. So far started in newspapers, but confused how much and where to invest. I think they've started in newspaper business. So they're saying, I want to invest, but so far I've started in newspapers, but I'm confused as to where to invest.
Well, as we said at the beginning, Bonnie, it's important to first of all, find out where do you have your passion in terms of investment.
Yes.
I want to assume that probably you are not employed and you are in selling newspapers.
Yes.
As a business person, one of the important things to remember is that you need to invest where your passion is.
Yes.
What you like to do, not what you see people doing. Because once you do that, you do not know the intricacies of the different businesses that they're dealing with. So it's important to find out, is newspaper what I want to do? No. Is selling vehicles what I want to do? Maybe that's what I want to do. You may not start there immediately, but you can plan towards getting there. All right, so that you can remove the confusion from your mind, think of what you will do, what you like doing, and therefore take your time understanding it, reading, knowing what happens in that business, and build yourself slowly in the direction that you want to be at. Yes.
All right. There is yet another SMS, and they're asking, please comment about trading in bills and bonds.
Trading in bills and bonds, what happens? Bills and bonds, you really don't trade. You go purchase them. However, if you want to sell your bond, you can go to the Nairobi Securities Exchange that enables you to trade the bond. Probably you had bought a bond for 10 years and you want out after 5 years. What you do is that you can go to the Securities Exchange and say, you know what, I would like to sell my bond. There are people who buy bonds from the Securities Exchange, and that is possible. What may not be possible is the bills. Once you buy for 91 days, you wait for 91 days. Once it's over, then you're able to get your money back. Yes.
Let's move on, and still more question on how to invest in offshore.
Yes.
There's a question. People are even sending salams to Ken, very popular man here. Someone says, good morning, your show is educative, thank you very much. Where can I get the book and how much does it go for? I need to invoice you, Ken. Moving on, what is the minimum number of shares that one can get, one can buy at the NSE?
100 or 3,000 shillings, whichever is lower.
It's set by law.
Those are the regulations at the Nairobi Securities Exchange. Yes, so 100 shares or 3,000 shillings, whichever is lower. Yes.
All right, someone else, I'm not in Nairobi, how do I get to invest at the NSE?
What you could do, we have banks that have got agencies in terms of buying and selling shares. I think you need to go to your local town and find out whether those banks have got the franchise or the right to do that. Just consult them. They'll give you the instructions what you need to do. You don't have to be in Nairobi. Yes.
Hi Ken, can you explain how the mutual fund operate and what are bonds? This is Callisto from Nakuru.
I've talked about bonds, so probably I don't want
I
to
think
talk
it's a
about
very
bonds.
mystical.
It's very mystical, by
topic
the
out
way.
there. Yeah.
Maybe let me just simplify it.
Yes.
A bond is an agreement between the purchaser and the buyer. Who is the buyer? The government. Government is the one that's buying.
Yes.
And who is selling is you and I. Now, bonds are purchased by government from individuals who've got money.
Yes.
The reason you buy a bond is government may be short of funds, so they would like to borrow the money from individuals in the economy. So the bond basically means is an agreement. That is a bond. That's what it's called, a bond. It's an agreement that I'm borrowing so much money from you and I'll pay it back to you after so long.
Yes.
With guaranteed returns. So government does that. That's what basically a bond is. Now, mutual fund. A mutual fund is an alternative, is a vehicle. It's called a collective investment vehicle.
Correct.
That collects monies from many individuals. For example, it may collect 1 million shillings from 100 people, which is 100 million. Take that 100 million and invest it on your behalf. You see, your 1 million is in the 100 million.
Correct.
All right? They call it mutual.
So they pool funds together.
So they pool funds together and they invest it together. And when you invest 100 million, you can negotiate on better rates. And you can also invest.
Who has the voting power when you're investing and negotiating? It's your broker who does that for you.
In a mutual fund? In a mutual fund or in the security?
In the mutual fund.
Mutual fund, you don't have the power. You give your power to the institution that has that unit trust of the mutual fund. They decide where money is going to be invested because the bottom line is making you the money.
Okay.
So they decide they can put money in fixed deposit, they can put it in bonds, they can put it in stocks and shares. Wherever they feel that they're going to get some income, they'll put it there. So what you do is that a mutual fund, you contribute. Now, there are very many in the market. If you look at the financial pages, you'll see very many unit trusts. In Kenya, we call them unit trusts. In the US, they call them mutual funds. So you pick one of those and see what is the minimum that you need to pay. That amount that you pay, or what we see in the newspaper, is the cost of a unit.
Yes.
Now, some are asking for a minimum of 10,000, others 20,000, others 100,000, depending on what you can afford.
Yes.
So you pick that in the newspaper, call them and tell them, I want to invest my unit. I have got 10,000 shillings to invest. So how it operates is that they take the 10,000 and convert it to units. It may be converted to, let's say, 10 units. Now, these 10 units, you look at the cost per unit that's presented in the newspaper, assuming that a unit is going for, let's say, 50 shillings.
Yes.
What they do is that as they continue investing, the value of the unit increases. By the time the unit reaches, say, 70 shillings, you can actually sell it off and make your 20 shillings per unit that you own. Okay, so you can decide to instruct the institution to either reinvest the money or you can withdraw at that point of view.
Correct.
The beauty of unit trust is that you do not do any trading. You do not have to worry about what's happening. Somebody else will do the investment for you and you will just be monitoring. They'll be sending you monthly statements to tell you how your unit is performing. Yes.
Well, indeed, if you're joining us, this is the Early Morning Business Chat on KTN Sunrise Business, and we're talking about how to invest at the NSC. In studio is Ken Monyoncho, who's the author of 2 books, How to Save Money for Investments and How to Invest in Financial Markets. And many thanks for those of you who've sent in your SMS. Remember, you can join in this conversation via SMS line 8040 or our Twitter handles at KTN Kenya, at KTN Business or Bonitunya, and we'll be more than glad to sample your views in this live broadcast. Moving on to SMSs, Ken, and someone, they didn't specify their name, and they're saying, how do I balance my investment, savings, and expenses?
You invest what you save. Invest what you save. And in terms of your expenses, you need to look at your budget.
Yes.
We talked about having a budget. It's very important to look at how you are spending your money. And that's basically in your budget. And in your budget, you need to have what we call an expenditure item called paying me, or pay myself first. That's very important. That's part of your budget expenditure.
Yes.
All right? And do not spend more than you earn. Please, if you find your lifestyle is too expensive, just change house, change your lifestyle, because I can assure you where you are today is not where you'll be tomorrow. So do not say now, how can I change my lifestyle? How can I lower myself? No, don't worry. That's just a point to help you take off to the next level. Yeah.
Well, there is Daniel from Mombasa. He says, what is the minimum bond requirement to invest? I think he's asking what is the minimum amount
requirement.
Yeah.
The bond is 50,000 shillings to invest. Yeah. The treasury bill is 100,000, but the bond is 50,000 shillings. Yes.
What are the other requirements that they may have apart from your capital?
Oh, there's nothing else. I mean, there's nothing else really. It's your money, and they know your customer. Once you give them your bank statement, they look at it, and your ID card. The bank just gives you a CDS account without a problem. Yeah.
Great. Moving on, there's another SMS. How do I get to know how to get share and buying them every day?
Now, what you do is, if you go to the website, I think Nairobi Securities Exchange website, they'll show you a list of all the brokers and all people who deal with buying and selling shares. Just call any one of them and ask them to give you the directions on how to get into a position of buying and selling shares on a daily basis. It's a challenging thing to buy and sell every day because you must have your newspaper on a daily basis, or be on TV or be on the computer, because the prices as they fluctuate is
and that's why I asked people out there in our devolved government government units that are getting into, how do they get this info? Where in an entire city village market, there's only one newspaper. How do we get this information there?
You're looking at the new system? Well, I don't know how they're going to do it, because they may want to follow using the newspaper, but now with our phones, you can actually subscribe to be told what are the prices of the different shares in the market, and by the end of the day, you'll know the prices, because you can subscribe to the shares that you are interested in, so that by the end of the day, you have made up your mind what you want to buy. So once you've made up your mind what you want to buy, you can either send an email or an SMS to your broker to be able to do the purchases for you.
Well, remember, you can join in the conversation on our SMS line 8040 or our Twitter handle at KTN Kenya, at Bonitunya, at KTN Business. We'll be more than glad to sample your views, your comments, and your questions in this live show. And we're talking about investing at the NSC and how you can invest your money at the NSC. In studio is Ken Monyoncho, who will be taking your questions. He has authored 2 books, How to Save Money for Investments and How to Invest in the Financial Markets. And there's an SMS, Ken. He says, "Hi, Ken. Rumor has it that Old Mutual is going down. Do you think our money is safe since the maturity minimum period is not yet reached? If I try to get to know it, then if I try to get it now, then I'll lose almost half of the cash. Please advise." This is Yara.
Well, I think it's very difficult to talk about companies out there and how they're doing.
But then just the scenario that probably the people managing their concerns coming from people who are managing your fund, how would they go about this?
What they do, where your funds are, it's important to keep a tab. What I hear this person saying is that there's a rumor that Old Mutual is going down. But my own feel is that this is a very old company. It's old companies, it's very difficult to just collapse. And it's not a local company, it's an international company. It's been there for a long time. In any case, there's what we call the Investor Compensation Fund. If you have invested your money, the only reason you can get half is because the performance of probably the mutual fund, because I know there was a time when the unit trusts were going at around, they had made over 100% return. Probably when this individual purchased the unit, and because they specialize in units, the value of that unit has gone to about half. The only way that you can get half your money out is by now moving out with your unit at this value. Of course, you'll make a loss if you're going to live out now. But if you wait until the end, let's say by bad chance, should they close, you will get your value of the units that you had in that institution. It is not going to be all your money if the value of the share that time is not at market price.
Plus, I think the Old Mutual is regulated in the market. So really, the regulator will ensure you get paid. We've seen many other brokerage firms that have gone down, but your investment is safe.
But Old Mutual has been there for a long time. I'm not vouching for them, but I'm saying if you look at the numbers and you look at the people who are in charge and you look at what's going on.
And really, it is a secure market. All right, great. There is someone called Ken who is also saying and says, "Ken, tell me, is it possible to invest in the NSC online without going through a broker?"
Right now, it's not possible yet. No, you have to go through a broker currently. And even if you are to go to the Securities Exchange, I think what they're trying to do now is how you can go through the broker to the NSC. There is you can't go directly to the Nairobi Stock Securities Exchange. Technology not yet reached that level, at least for our market. Not yet.
And we're already going into county governments.
Well, that's even more challenging, you see, because now by the time you do all the land and the ones to all the counties, it's going to be quite a high level of investment. Yes.
Today, Ken, I really don't envy you because you're seated in a position where you get all manner of questions. There's an SMS that says, from Nebat, he says, what can be done to improve the price of Safaricom stocks?
There's nothing wrong with the price of Safaricom stocks, Bonnie, because the beauty about...
I think probably they're referring to it got to, at the offering, it was at 5 shillings,
That's
about
fine.
3.90.
That's perfectly okay.
Yes.
That's perfectly okay.
And that's what we're talking about, the fluctuations in the market.
Yes.
It is a business, there are risks.
It's a business. But you see, the beauty of these risks, if I remember, when the shares were purchased, there are two things you can do when you buy shares, Bonnie. When you buy shares, let's say at 5 shillings, let's take Safaricom because they've mentioned Safaricom. You bought the share at 5 shillings. And of course, the expectation was the share would either double or increase by 30 or 40%.
Correct.
Unfortunately, it came down to 390. And maybe right now it's about 350 or 345. Now, from the time the person bought the Safaricom shares, I would like him or her to calculate how many times have they got dividends. Assuming they got dividends of 50 cents the first time.
Yes.
It means one share is 50 cents. So from 390, if you add 50 cents, is how much? It's 440.
440.
And assuming the following year,
anyway, it's too early to do mental sums here.
You haven't woken up. But all I'm saying is that they need to also include the dividends they've been earning for the last 3-4 years of the shares they've bought.
True.
And let them not just look at what they bought them for and what it is going right now.
Correct.
Let them include, if they can include the prices,
the dividends
they've got, they will realize they've earned approximately 5 shillings per share right now. Yes.
Great. Moving on, we have quite a number, so we'll try to rush through.
Yes.
What are mutual funds? How do they work? And what types are there?
We've talked about mutual funds, basically unit trusts.
Yes.
Of course, we've got money market funds. Money market, basically, they take your money and invest it in just either fixed deposits or in the fixed deposits in banks. They look for good returns from banks.
Yes.
We've got what we call the mixed, or is a crossbreed between the money market and the shares. Okay, so they are able to mix. There's a bit of a balance, because when you put your money in a shilling fund, what happens is that you are assured of a certain return, and therefore the return is quite low. And then we've got a fund that's purely on stocks. They take your money and put it in shares. Those are high risk.
Correct.
So they've got high risk, medium risk, and low risk. So those ones are defined in the newspapers. Yes.
Joseph says, what happens to my shares if the company collapses?
When you buy shares, you are an owner, and therefore you have a right to bring in new people or new directors. You have a voting right. If the company collapses, since you're an owner of the company, you also share in the loss. That's how shares work. You have a right. When you make profits, you get dividends. When you make losses, you don't get anything. If the company collapses, then you also assume the loss of the company, because it was your own company.
I think just to be not on this pessimistic side, you also get to vote, which means you can attend the AGMs.
Yes.
And you can avert such a situation.
You can,
if you feel that probably the directors are not leading the company in the way that you deem fit,
that's right,
you can vote them out.
Yes.
Okay.
Yes.
Great. There you have it, Joseph. There's an SMS from Guilford. It says, must I buy IPO to own shares in a company, or how do I do it?
You don't need to wait for an IPO. Just identify a stock brokerage firm from, I believe, the Nairobi Securities Exchange website. For those who are listed and recognized, call them. You can actually buy a share from the market directly. Yes.
Great. There's an SMS here. It says, hello, my elder. I am so pleased to see you this early morning. I need to invoice you. Thanks a lot for being ready to teach us about how to use and invest our finances. Congratulations, my elder, and God bless you. This is Esther Maru from Embakasi. Well, your SMS has been received, Esther. I am Kefa. Can you buy shares from more than one company through your CDSC account?
Yes, you can buy as many shares as possible through one account. But you can also have a few other accounts which are specifically to that brokerage firm. Because if you prefer to have 3 brokerage firms, the unique ID will be the broker or the person who is buying and selling your shares. It is really advisable that you do not just buy one share. there's what we call portfolio. And in terms of our portfolio, what we mean is that it's important that you buy as many shares of different types as possible.
Yes.
For example, you may want to buy some shares from the banking firm, some shares from a manufacturing firm, some shares from an agricultural firm, so that all these companies do not go the same direction at the same time. So that if one company is doing very well and one is not doing as well, what you do, they tend to neutralize. So what you say is that the income or the risks tend to get reduced when you have more shares that you bought from the stock market. Yes.
Well, moving on. Hi again. When your stock, I think this is someone who had sent an earlier SMS and say, hi again. When your stock prices rise and you sell, can you get your money before they fall? Again, I mean, how fast do you get your money after selling?
Within 24 hours, maximum to 48, but within 24 hours, you'll be able to get your money. Yes.
We just mentioned that as that now we cannot trade online.
Online, yes.
And you're talking about getting your money within 24 hours.
Yes.
So what happens? Do you have to call?
No, it's automatic. There's an account. You see, when you open a CDS account with your broker,
yes,
there's an account. There's your bank account, of course, that the transaction is taking place.
Yes.
So as soon as they sell, that money is just transferred to an account within that institution that is just for you. So if you want your money, just go tell them, I want my money, and they just give you a check. You get your money out. Yes.
There's Peter from Mombasa. He says, excellent job, Bonnie and Ken. Thank you very much. Peter, please, I'd like to know more about NSC. I have very little info when it comes to NSC, so please give us all the details concerning the NSC investing. And Peter, if you're watching, then you've gotten all the details, but please keep watching and please send in your questions. We still have some little bit of time. More people asking where they can get the book and do you have a website? We'll give that later on. Then there is... still on the bit about investing out of town, and I think this is a concern that is
yes, I can see that.
Up.
Yeah.
From where you sit and having worked at the CMA and looking at the markets over time and where we're heading now into county governments, what are some of the options that we have as a market to ensure that we include people out there in the county governments moving forward?
That's a good question, Bonnie. But I'm wondering, is it us to include, or is people to raise up the sense that they would like to invest and therefore provide opportunities for them to do that?
Because what I'm getting at is looking at, for example, we cannot invest online. That is really an operation that probably it is the market to do it, not the investors. So
True.
With a need that is evidently there, because most of the people who are investing even in your counter Total, for example, are not all coming from Nairobi.
True.
How do we rope in all these people, someone from Garissa who wants to put in their money in the NSC?
Okay.
Yeah.
What I hear you asking is that how do we then assist the NSC
Yes.
to ensure that it reaches as many Kenyans as possible in terms of the investing? For me, one model that seems to have worked very well is a model of having banks with a wing of investing in shares and in bonds. So that since we have got a very good network for a number of the banks, what they need to do is to ensure that they have a desk, just a desk where they are going to enable investors who are interested in buying and selling shares to visit, open an account there, and be able to invest, deposit their money for the investment to be done across the country. That is a model that is going to work now. Maybe later on, when we go IT and when we are able to get networked, people then can move up to the next level. Because the other option, of course, definitely is, and this is just an assumption that, of course, within the counties, we've got proper connectivity where people can actually just send an email wherever it is to their brokers, wherever they are. It could be Nairobi, it could be in whichever position. So they're able to send in their request, and then that request is processed, and then there's going to be a response. Okay. For now, that is the model we can go with. But in terms of when we move on later, I want to believe that there's got to be some what we call wide area networking that can assist the investment of the investor through the IT. Yes.
Well, if you're joining us now, this is KTN Sunrise Business, and we're talking about how to invest your money at the Nairobi Securities Exchange, and basically how to invest your money in stocks. And in studio, I'm joined by Ken Monyoncho, who's authored 2 books. One is How to Save Money for Investments and How to Invest in the Financial Markets. Remember, you can join this conversation right now. It is real time on your SMS line 8040 or our Twitter handle at KTN Kenya, at KTN Business, or Bonitunya, and we'll be able to sample these views as they come in. An SMS coming through says, hi, can I be able to get all the report as the broker sell and buys, or can or will I be missing some reports? Basically, I think they're asking what information is entitled to them from the broker.
I don't think broker can give you the information of buying and selling. That is their own, it's their own private information.
It's technical.
It's technical, and the best they can tell you is really what is happening in the market, and that information is available anyway. If you open your computer and go to NSC, you'll be seeing, they'll be seeing the prices telling you what's going on in the market. So the information you need, you can actually get from the Nairobi Securities Exchange, which is basically what is the current price, and what is it selling at, what's the average price, what is it trading, and if it's a share you are interested in, you'll get that information.
Okay. Hi, I'm Jack from Mombasa. Tell me about the over-the-counter market, and do we have it in Kenya?
Over-the-counter market is still very young in Kenya. It's not been running for a while. I think one of the first few products that was launched about 2-3 months ago. This is supposed to be a very simplistic process of buying shares. That's why they call it over-the-counter. I'll go over-the-counter and say, can I have that share?
Just like buying
I would like to have this share. You know, there's no process, forms, what, and so forth. No. Okay, so what we have is still a very young counter. But I think it's what is being developed now to encourage small, young businesses that are coming up to be able to list and to be able to actually mobilize resources through the selling of the shares. Yes.
Well, many thanks. If you're SMS saying many thanks, we're getting them, and we'll try to sample as many as we can. Mr. Ken, good morning. How can we get your books? Where do we purchase them? This is a bagger from Sololo. Subject to invoicing you. There's an SMS says, hello, the program is so informative, but we are at work now. Can it be repeated one evening? This is Charles Tumbo. Well, Charles, you can get this very show on our website. Go to www.standardmedia.co.ke. Go to KTN Sunrise, and you'll be able to watch this as it's streaming in live. And if you're at the office, you can get it online. And it is streaming in live right now on our KTN portal. Moving on, there is an SMS that says, good morning, how can the youth take advantage of the stock market given factors such as still being in high school? This is Godwin's Olang from Langata.
Very easy.
I think this is a high school student.
I love that. Market, yes. I love that. I mean, this is the beginning of success. What they need to do, these young men get pocket money. And wherever I talk to young students, I tell them, you get pocket money.
Yes.
And the pocket money you have, take part of it and start buying shares.
Nowadays, students get pocket money enough to invest at the NSC.
You know, nowadays, pocket money was 20 shillings. Nowadays, people get 500, 1,000 shillings pocket money per month.
Yes.
And if you're buying 100 shares, which is minimum, you can actually buy Safaricom shares every month for 300 bob, 360 shillings. Isn't it? 100 bob times 3 shillings and 60 cents is 365 shillings every month. So you can say, I will not eat too much this month. I will take part of that money and invest it. So it's very possible that you can start from primary.
So in 3 months, you have about 1,000 shares.
You have about 300 shares. Let's say it's 100 shares at 3 shillings and 65 cents. So in 3 months, you've got 300 shares. 300. Yes. And in a year, you have 1,000 shares. You see,
in 4 years, you have 4,000 shares.
4,000 shares, straightforward. By the time he clears, he'll be very wealthy because we're sure that the share will not be still at 365. It will have gone to some other price, which is much higher.
And I think the beauty of investing in the NSC is that it grows on you, and with time, you get to be your own broker. You get to learn how the rope works.
Yes, the best way to invest, by the way, is to start. Get yourself a broker, start investing, and you will get better the way as you move on. Yes.
Now, Ken, time has really run out, and my director tells me we need to wind up right now. But I'll just take 3 questions, which you'll sum up and then give us your closing comments.
Yes.
Very quickly, there is Patrick from Magadi says, please shed some light on Forex trade. And there is another one from. Can you tell us more about investment beside other investments beside what you're telling us? This is Gain from Mombasa, and there is Silas Biketi. He says, "Good morning. How can you advise one on shares to purchase for the first time?" And lastly, do these brokers who are not banks, for example, Nyaga stock brokers, also give a CDSC account, or how do you connect them with your CDSC account? This is Kefa. Probably take
right. Let's see whether I can remember all of them together. For the last one, whoever your broker is, you will get a CDS account through them, so there's no problem.
Yes.
Okay. Then we have the next one.
About forex trade.
Forex trading.
Yeah.
Forex is a regulated business with central bank. Really, it's about buying and selling foreign exchange.
Yes.
It's quite a heavy investment you need to make. For you to invest, you need to get a license to do that, and you need to have some sufficient source of ensuring that you've got enough foreign exchange for you to buy and sell. And really, the trade in forex is you buy low and you sell high. That's all.
Yes.
And that's on a daily basis. All right. And and there is more or less a margin that has been set. Central bank gives a certain margin, but you're able to play around within that kind of margin. So any forex trader can be able to go in and buy and sell depending on what they're looking at. Okay.
There was Biketi who asked you about can you advise on shares to purchase for the first time?
For the first time, they just go to the website, Nairobi Securities Exchange, identify the broker there, call the broker, say you want to buy shares, and they'll tell you what to do. Open a CDS account, and from there you just start trading the shares. Yes, you don't need to wait for an IPO. Yes.
Now, Ken, we really need to wrap this up. I know there are too many SMSs coming through, but remember, while the show might end, the conversation keeps going on. So please, you can join us on Twitter at KTN Business, at KTN Kenya, and let's keep this going. We'll drop in Ken's Twitter handle, and we'll keep going, taking your conversations through on social media even after the show ends. But Ken, your closing comments.
Well, I know that many Kenyans are looking for ways in which they can invest. And for me, for what I did is I'm hoping that the books that I have written, and thanks to What Are Life publishers that have been very kind, I never knew I'd publish a book, but they came along and decided, look here, we can do this book for you and just do the marketing. I'm very grateful to What Are Life. Kenyans need to just read. There's lots of information, how they can make money, without necessarily being there, because investing in the securities exchange is really money working for you while you sleep.
Yes.
You don't have to be there. And if you can start now, you will be surprised in 5 years' time what has happened, or even the next 10 years' time. So I just want to encourage all our Kenyans, please read, get the information. The book is very simple. I have decided to not use any financial language, not use any complicated English, just the normal English to enable as many Kenyans to read and understand what we have in our economy.
You have a website?
kenmonyoncho.com. Just kenmonyoncho.com. If they go there, they'll be able to get what I have there on the website. Yes.
Well, many thanks for making time for us this morning.
You're welcome.
And also for just creating time to answer all the
Thank
many
you so
questions
much, Bonnie.
Kenyans had
Really
on
appreciate
investment. Really, it is our honor to have you here.
Thank you so much.
That has been Ken Monyoncho, the author of How to Save Money for Investments and How to Invest in the Financial Markets. And we've been talking about how you can get to invest your money at the NSE. Many thanks for all of you who sent your SMSs and your comments and opinions through our SMS line and our Twitter handles. Many thanks to you for joining us through the show. And remember, this show ends here, but the conversation continues online. So we'll be keen to look at to sample and just engage with you as we move on. This has been KTN Sunrise Business every Tuesday morning, where we talk matters business. My name is Bonnie Tunya. Do have a lovely day.